McEwen Mining Inc. on the Toronto and the New York Stock Exchange and the ticker code MUX is a precious metals producer in different places around the world. And joining me right now is Chairman and Chief Owner Rob McEwen. Hello, Rob.
Good afternoon. Is it good morning?
Good morning and good afternoon. Thank you so much for joining us today. You've got some terrific projects and more recently a very large copper project in Argentina. But before we talk about that, what is the status of your producing assets, your gold assets and silver assets?
We have 3 producing mines and 1 on a care maintenance. They're spread between Canada, the United States, Mexico, and Argentina. 3 of them we own 100%, and 1 is a joint venture, that being the one at the bottom of Argentina. It's a partnership with a company called Azules Mining. They will produce about 130 to 140,000 ounces of gold equivalent ounces. That would be gold and silver. And it's 4 years out, we're looking at it expanding that to 200,000 ounces organically. And at the same time, I think we're in a market where one should be acquiring. I think the gold price is going significantly higher. And I could see it at $3,000 before year end, but I have a $5,000 number on it. And it's just time to be assembling resources and production.
And probably also a good time to look at gold equities, you know, in terms of McEwen Mining, because 10 years ago, we spoke, and if you'd had $1 million in cash in the bank, you've only got a purchasing power of about 750,000 now. Whereas the equities, the share price in McEwen Mining has gone up 10 times. And so, you know, there's a reflection in the increase in value of precious metals. Now, you're a precious metals guy, but you've added copper to the portfolio, most particularly Los Azules. Let's talk about that, with 10.7 billion pounds of copper.
Well, if you include if you add up the indicated and inferred resources, we're at 37.6 billion pounds of copper contained in 5.7 billion tons. It's considered the 8th largest undeveloped copper deposit in the world. If you were to exclude those copper deposits that are larger, controlled by majors, it'd be the 4th largest, not controlled by a major. It's private at the moment. We're looking to take it public in the first half of next year, once we have a bankable feasibility study in hand and a permit to build. We have a number of shareholders. McEwen Mining, the parent company, has a 48% interest. Stellantis, the 2nd largest car manufacturer in the world, has a 19% interest. Rio Tinto, through its technology arm, Newton Ventures, has a 14%, and I have a 13% interest personally. In McEwen Mining and McEwen Copper, I have $225 million invested. That's my cost base. So I take $1 a year, and it's I believe that we have, and have for some time, looked at Los Azules as a copper unicorn. We've raised over $400 million for it privately in the last 2 years. Currently, we have a financing on deck, and that at $30 a share, that would suggest we have a implied market cap of just under $1 billion on the copper.
This is a globally significant project, and it's a multi-generational project too. What kind of environmental things then, in terms of developing this copper mine? You mentioned earlier that you're bringing in architecture into that whole mine concept to provide something that's very sustainable for generations to come. Please explain that.
Happy to. It's located between 3,100 and 3,600 meters in the Andes Mountains on the border with Chile in the province of San Juan. This part of the world, we're in the rain shadow, so water is not as abundant, but we have enough water for the mine, but water is a big concern of the local population. Closest community is about 70 kilometers away, but water is a concern. So we elected to change the process. We were going to make copper. Rather than produce a concentrate, we were going to produce a cathode. And to do that, it'll be a heap leach operation. One of my biggest concerns was if we went the conventional route and produced a concentrate, we would have to have tailings. We're not going to have tailings here, but they envisioned a tailings dam 300 meters tall in a area that is seismically active. And I just went, that's a non-starter. The people downstream would be looking at this and saying, what are you going to do to our water system? Because maybe there's going to be a little earthquake and you might crack that dam. So one is with the heap leach process, our water consumption is a quarter of a comparable size conventional mine. In terms of carbon, we'll be in the lowest decile of carbon emissions, and that's going to be achieved by the fact that there's a major power company in Argentina called YPF, and they've given us commitment to provide electricity from 100% renewable sources, wind, hydro, and solar. All of our fleets and most of the equipment there we envision to be electric, so low carbon. Stellantis, our second largest shareholder, wanted us to be carbon neutral by 2038, and we believe that's quite achievable. The accommodations for the mine camp are one, to gain social license, two, to create beauty on the landscape, and beauty isn't something that's normally talked about when you talk about mining. So we brought in an architect 2 years ago who's considered the Steve Jobs of the green living building space. And he's helped us to design a beautiful setting that I think will attract some of the best talent at a time when the pool of talent in the mining industry is shrinking, particularly for remote bases. So if you can envision a terraced accommodation enclosed in a large transparent envelope powered by solar with hanging gardens in it and growing its own food, processing its own water, it's really quite beautiful.
It sounds utopian, Rob. And it reminds me of when you threw all the information out there for Goldcorp and Red Lake, and you did something very different in the world and said, there's the information, let's do something, let's find something, and it worked. And so this is very reminiscent of that, where you're looking at, the current perception of the public is mining is dirty. They don't realize that mining is essential. And so if you can combine these attributes that you just spoke about, the hanging gardens and growing your food, and also, as I understand, you'd be producing the copper there. I mean, you're becoming not just producing copper as copper, but the LBMA plate copper.
Yes.
So almost, end to end from soil to market, really, with that copper.
Yes, and anybody who wanted to know the provenance of their copper, it comes directly from the mine, and it would deal with their ESG requirements as well.
So the new precious metal, copper. So earlier we were talking about numbers, and this was astonishing to me, was that the combined value of McEwen's mineral assets is something in the order of equivalent of the gold produced in the last 100 years. Is that correct?
Well, not in the world, but in an area in Timmins, Canada, which is one of the most prolific gold districts in Canada. Yes, if you to come up with a gold equivalent of the copper resource, you take the gold price, divide it by the copper price, and come up with a product, which is the number of pounds that equals the value of 1 ounce of gold. And when you divide that product into the 37.6 billion pounds resource, you come up with just over 60 million ounce gold equivalent and we're looking at a projected cost of $1.02 a pound. Multiplied by that same product, you get a cost of just over $630 an ounce. Cash, all in sustaining, would be just under $1,000, and you're looking at 650,000 ounces a year for 27 years. And at that point, we've only mined less than 40% of the resource we've defined.
Unbelievable.
So
fantastic.
The Timmins camp has produced just over 60 million ounces in the last 100 years.
Yeah,
so
which was
it's a big mine, and that's why I say I think it's going to be bigger than Goldcorp.
Right. Well, I do remember, a famous photo of you sitting on a pallet of gold bars, and I would say that it probably won't
200,000
happen.
ounces.
Sorry,
200,000 ounces was what I was sitting on.
it was a big lump of gold, and but the mountain of copper that is indicated from Los Azules is astonishing.
Well, we've discovered 3 kilometers away. Think we may have encountered another intrusive copper deposit. It's got copper oxides on surface. It's got quartz veining, same as our Los Azules project. It's got a huge molybdenum signature, and we just got a bite into it when we closed our drill season. We'll be starting up again in October, drilling there. So that resource, we know it's expanding to the north and south, but here just over the ridge might be another. Well, fingers crossed, toes crossed, there might be another one.
That's the great thing about exploration and mining, and I think that's probably what keeps you in the game, is the excitement of the next discovery.
Yes.
Letting out the kite like Benjamin Franklin and getting hit again by lightning. And certainly Los Azules is shaping up to be one of those. Let's just talk a second about, my perception of, the public. I know people are looking at the purchasing power of their dollar right now and thinking, where is it all going? And so, we did mention that if you'd invested in gold or gold equities, 10 years ago, you way further in front now. But not every man in the street has the ability to tuck away gold bars. But how they're certainly looking at, mining and I guess education. We just finished 3 days of a gold conference education series here in Sydney, Australia. And there's a lot more interest in why is our currency devaluing and what is this mining thing? What's your take on mining and the general awareness?
It's very low, and percentage in portfolios, say in North America, is quite small. It might be about 1% across the broad market. It tends to be a late cycle mover, and people looking at the falling purchasing power of their currency are looking to places to shelter it, and gold has been one of those areas people have gone to throughout these cycles. So I think we're going to see more coming in, and particularly with gold. I mean, it touched $2,600 today. People are going to look at it and say, well, why is it moving? And then they'll start reflecting on, well, we've got a lot of inflation. I can't buy as much food. My rent is more expensive. My housing is more expensive. My transportation. How do I protect myself? And gold has held out. It's been that place protecting the purchasing power over the millennium. So I think you're going to see more money attracted to that. the broad market, there was the biotech, there was the AI and Bitcoins. Here's something more tangible that you can get into and more enduring, I think. It's the time in the cycle. And I would look, the industry, I think, did a great disservice by the innovation of royalty companies and streaming companies. It was an easy source of money for, particularly in North America, rather than doing an equity issue and incurring dilution. They said, well, I'll just take this money. But what they did is gave away their profit margins, reduced their profit margins significantly. And when you look at the companies that sold streams and royalties and compare it, those companies that own the streams and the royalties have outperformed their producers by a significant margin because they didn't have any management issues or environmental issues. They just took it right off, cream off the top.
They cooked the ticket.
Yes. But I think now you're starting to see the majors with their large production generating good cash flow. They're paying a dividend, and people are going, when are the intermediates going to do that? And the juniors, and you're looking at high cost producers, suddenly with the price of gold going up, their margins are expanding very rapidly, the profit margin. And that's going to attract attention. And we're seeing more M&A in the market. I mean, you have BHP in their failed attempt to buy Anglo for 37 billion. BHP, they just also went in and cut a deal with Lundin Mining in the same province as we're in Argentina for 4.4 billion. And if I may, comparing that deal with our project in Argentina, which is in the same province, we're at a lower altitude, we're closer to infrastructure, we're a larger resource base based on the published numbers than the combination of those two projects, and we have an implied market cap a quarter of what BHP and Lundin agreed to. So
there's significant promise here, Mr. McEwen. I've been speaking with Rob McEwen, who's the chairman and chief owner of McEwen Mining Inc., listed on the Toronto and the New York Stock Exchange under the ticker code MUX. And please go to McEwen Mining's website, download the fact sheet, which is a one-pager, and read those astonishing numbers. And I think, Rob, you've got an astonishing future. And thank you very much for speaking with me today.
Thank you, Tim. It's been a pleasure. Catch up.